The BMA, when we look at the BMA, Bermuda, and the insurance industry here from London and from Lloyd's, I have to say that I want to pay tribute to the work that the BMA has done, because I believe that they have been absolutely fundamental to the development of the Bermudian insurance industry, and that they have developed and become more and more important. And I believe that the BMA are absolutely critical to the future success of the Bermudian industry, and I would like to pay great tribute to Jeremy and his colleagues and Gerald for the work that they do. Now, what I've been asked to do this morning is to talk to you about the changing nature of global insurance and the reinsurance markets, and also, of course, Lloyd's. But I want to say at the outset, I do this with some trepidation, as I stand in front of a large number of very seasoned professionals, and here I am, only 3 years into insurance. Now, London and Bermuda are often seen as arch competitors, and of course, in some ways we are. But if I look at the Bermudian presence in Lloyd's itself, we have 20 syndicates with Bermudian capital, and that number is growing. Depending on your definition, in round terms, Bermuda provides around 25% of the capacity for the Lloyd's market. We also have significant reinsurance flow between London and Bermuda. So we're largely complementary. And I believe most importantly, though, we are trusted competitors and we're trusted partners. And trust in insurance is absolutely fundamental. So just a few words on Lloyd's. Currently, we have 94 syndicates managed by 57 managing agents with more than 200 different brokers bringing in business from over 200 countries and territories. So a healthy, diverse market. Now, you may be aware of a recent study undertaken by the Boston Consulting Group, which was commissioned by the London Market Association, the LMA, and that, of course, includes Lloyd's. And this report was on the future role of London in the global insurance industry. It confirms the power of London, for the London market is by far the largest global hub for commercial and specialty risk. 2013, GWP totaled $94 billion, of which 70 billion is written by London. This compares with Bermuda at 13, Zurich at 4.2, Singapore 3.2. In reinsurance, although London was identified as one of the largest hubs in the world, with 23 billion of GWP, it's significantly smaller than Germany at 43 and smaller than Bermuda and Switzerland, both at 25. The market is at a crossroads. The emergence of the new markets in seriously underinsured economies in Southeast Asia, South America, China, Brazil, and India is undoubtedly changing the landscape. But what an opportunity that presents. And that is just the beginning. So moving on to the evolution of risk, one quote in the BCG report stood out for me, and it was from the CEO of a risk management organization. And he said, only 10% of the corporate risk map is covered by insurance. So coming back to opportunities, despite some economic slowdown in certain territories, I do believe economic growth will continue at a significant rate over the next 20 to 25 years globally. Even on modest predictions, we estimate that our own addressable insurance market will grow from around $600 billion per annum today to close to $2 trillion by 2025. Now, these are obviously ballpark figures, but the essential point is that China, India, Brazil, Mexico, and Turkey will form the majority of global GDP, and these countries are among the least insured in the world. According to Lloyd's own figures, A 1% rise in insurance penetration translates into a 13% reduction in uninsured losses, a 22% reduction in taxpayers' contribution following a disaster, and increased investment equivalent to 2% of national GDP. Most governments in most countries get this, and we see examples of this virtuous circle played out in many economies. We do have some concerns about the concentration of alternative capital focusing on a few specific areas, both geographic and in terms of peak risk. We need to try to harness that capital on a broader basis, particularly to assist the industry in driving forward into new markets and new products. And this will require sophisticated, knowledgeable, and long-term investors. And they will need to be supported by the continuous development of analytical resources and techniques, something which was very much highlighted in the BCG report. And a lot of work is being done on this in London and within Lloyd's, and it most certainly needs to be. In insurance, we've undoubtedly suffered from the backlash of the banking crisis. We've made strenuous efforts, both with governments and regulators, to ensure they distinguish between the two industries. To be frank, there are some concerning signs, particularly under the heading of capital. As we speak, we are working round the clock to implement Solvency II to a tight timetable. Solvency II as a capital setting mechanism is something that Lloyd's supports. However, the bureaucracy and processes for its implementation, in fairness not determined by the PRA but more in Europe, has resulted in a cost to the industry which is several times what it should have been. The cost to the Lloyd's market alone will exceed $500 million. In addition to that, there are some slightly worrying signs of regulators wanting to load up capital over and above the Solvency II outputs. That's one thing for regulators wanting to sleep well at night by loading capital, understandably driven by their experience in banking. But we need to be very conscious of the dangers of this diminishing London's competitive position. So, ladies and gentlemen, I believe that the future facing London and Bermuda, indeed the industry as a whole, is a bright one. We have a truly extraordinary opportunity over the next decade. One of the great pleasures of becoming part of the insurance industry, admittedly very late in my life, is the extraordinary social and economic value that insurance provides for countries, economies, businesses, and therefore, most importantly, communities and people. We play a vital role in the sustainability and growth of global economies. We don't always do a good job in communicating this. When you look around the world and look at the extraordinary level of underinsurance in the higher growth economies, we know we must tell the story better. If you stand back and compare our industry with any other at this point, you would have to say, as my own CEO, Inga Beale, said the other day, we are, in fact, at the beginning of a golden era. We have all the talent, skill, and discipline to prosper in these new markets. And I believe the answer to these competitive threats doesn't lie so much in what Asia or Latin America or Africa does. The answer is, what will we do in the world's established insurance hubs to find the products and processes to service these clients? We've got the knowledge, the talent, and the skills, much of it right here in this room. We must ensure that we have the courage and the energy to seize the opportunities that present themselves, and I'm sure we will. Thank you very much.